Hi guys, today I wanted to focus on a question that I get asked quite a lot. Should I fix my home loan, or is now the time to fix? Whether rates are going up or down, it always seems to be a very common question. So there's a couple of main reasons, there's quite a few more, but there's two main reasons I'll focus on today. And that is, one is affordability, and two is hedging your bets against the bank. So, can I win out over the long term of the loan? So affordability, that's a good one. What if rates go up tomorrow, next week, next year? Can I still afford my home loan? So in that scenario, it's not about saving money, it's not about getting one up on the bank or having the best rate possible. It's about making sure that whatever happens, you're not going to lose your home. You're not going to be in a situation where you can't afford your mortgage. So saving money is not the driving factor here, but keeping your mortgage affordable is. So that's very important. Option two, hedging your bets against the bank. So in that scenario, you're more thinking along the lines of, what's the way I can win out with this mortgage and make it cheaper over the long term? Now, I'm not sure if you know, but most banks have a lot more power to do research than you or I may do. So more often than not, they get it right more times than we do. So when it's a question of, am I going to beat the bank over the long term? Well, in some cases you may win out, some cases you may not. But it's not about, if you can afford the repayments either way, then by all means go ahead, take a gamble. What have we got to lose? Rates could go up, rates could go down. Obviously with the variable rate, you're paying the market rate all the time. So the benefit there is, whatever happens in the market, you know that you're paying the market rate. If you fix it and rates go up, you win out. If you fix it, rates go down, you lose out. I have seen situations where someone has fixed it sort of here, with rates expected to go up here. They have done that, and obviously the person fixing it down here has won out. But then a couple of months later, rates have just dropped all the way back down to here. So for this period, yeah, they're winning out, and I thought they were doing really well. But as soon as rates drop down to here, they're thinking, wow, I'm really paying a lot more than I should be now. So you just got to be mindful that that can happen, and that's actually happened to me before as well, and I'm in finance, so like I said, we don't always get it right, and that's why fixing, we never really recommend for or against it. It comes down to what your motivations are behind wanting to fix and what your appetite for risk is. But certainly there will be some instances where a variable rate versus a fixed rate product, and I've had this with a couple of clients where the fixed rate might be so much lower than the variable that it just makes sense. For example, I had one client that was on a variable rate. Due to their circumstances, it was quite a high variable rate, but that same lender had a really good promotion on fixed. It's about 1% lower than the variable. So in that instance, we put them on a fixed because even if rates change, they're still going to be winning out massively. They had to change quite a lot to make up that gap. So in that case, it certainly made sense to fix it, but that's not always going to be the case. So all I can say is work out what's more important to you, affordability or taking a punt. If it's affordability, fixing is a great way to ensure that your affordability level is not going to change for a period of time. One last comment that I would make about fixing your home loan is just bear in mind that sometimes you might fix it here, and during that time variable rates might go up to here, but you're still down here. So you've got to remember, when that fixed rate ends, you're going to jump from here to here instantly. Which can be, that itself can put a lot of people, in a situation where they can't afford it. Whereas, if you're on variable, yes, you'll get increases over time, but they're going to slowly move up, and you're going to get time to adjust in that budget. So, yes, you'd certainly win out from here to here in that time, but just bear in mind that when the time comes, you may have a big jump, you may not, depending on where rates have gone. So, the worst case scenario, plan for it. If you are on a fixed rate and your loan allows you to make extra payments, maybe if rates do start going up, maybe you want to start just adding some extra repayments into your mortgage in line with what you would pay if you weren't fixed, just so you're ready when the fixed rate does end. That's all from me today. Any questions, hit us up. Otherwise, good luck. Talk to you soon. Bye.